Welcome to the Morrison Report. Hosted by Deval Morrison, sales representative for Bosley Real Estate Limited Brokerage. Ms. Morrison has co-authored the best-selling book, Success Today, with Brian Tracy, and has been interviewed on NBC, ABC, and CBS affiliates by Bob Guinea from The Bachelor. Deval, a real estate investor, has spoken to many attendees at her real estate seminars and is currently ranked in the top 5% of agents in her brokerage. Join me in welcoming your host, Deval Morrison.
Thanks so much for joining the Morrison Report podcast today. I really wanted to create a podcast that showcased Toronto real estate insights, just everything I was curious to learn about real estate. So thanks so much for joining us today, and we're excited for a really good show. Thanks so much for joining me today on the podcast. Today I have with us Sean Hildebrand. He is the Senior Vice President of Urban Nation. Thanks so much for joining us today, Sean.
Sure, no problem. Thanks for having me.
Awesome. Can you tell our listeners a little bit, what does Urban Nation do?
Urbanation is a boutique research firm focused on the condominium market in the Greater Toronto Area. We track market activity in new development projects, every completed building, as well as rental market activity in condo projects. We also recently began tracking new purpose-built developments, and earlier this year acquired a commercial real estate company. So now we're tracking, in addition to the condo and rental markets, all building and land sales across the GTA. So basically giving us full coverage of the entire real estate market. We produce quarterly reports and have a historical online database that we maintain, and are continually engaged in market feasibility studies for developers. So they'll come to us and ask us to produce a study for a site that they're evaluating, and we will ultimately produce a recommendation for the site in terms of the appropriate suite mix and suite sizes, who the target buyer or renter is, and what they could sell it for or rent it for in the marketplace. So we're a pretty small group, but we're very busy and always, I guess, at the forefront of what's happening on the Toronto real estate market scene.
Perfect. That sounds great. It definitely sounds like you would be kept very, very busy. That's for sure with that kind of a mandate. Can you tell us sort of what is the trend that you've seen over the years in terms of the size of condos?
The size of condos has continued to trend down, certainly. Average size of new units that have been developed does keep getting smaller. However, I will say that recently we've started to see a bit of a shift in the composition of units that are being developed. So a few years ago, there was a very heavy reliance on smaller one-bedrooms and studios, and now you're starting to see more efficiently laid out, I would say, one-bedrooms plus dens and compact two-bedroom units. So the allocation of units by unit type is becoming a bit more diverse. However, the average sizes do continue to trend down.
Right.
We are, however, seeing a greater share of three-bedroom units being developed now compared to the past 5 to 10 years. So usually within the aggregate new condo development market, you would see about 1, maybe 2% share of three-bedroom units. And now we're starting to see that rise above 5% for the first time in a long time. And that is really in response to changing demand dynamics in the marketplace. So it's not just first-time buyers and investors that are buying condominiums. It's those that are moving up within the market and those that are moving down from single-family homes. So they are demanding two-bedroom units in a lot of cases, and developers are beginning to respond to that. The market right now is actually very diverse in terms of its composition of demand. And we're seeing sales grow across all price segments, across all unit types, on the for sale market and also on the rental market as well. And I think that's actually provided some information for developers that are going the rental route. So those new projects that you're starting to see under construction or planned for development that are going to be dedicated rental will see larger shares of two-bedroom units as well. So they're looking to cater towards longer-term tenants, and create more of a community feel within the buildings.
Mm-hmm.
And with that, not as many small units and more of an emphasis on the 2 beds as opposed to the 1 bedrooms.
Got it. Now, would you say some of the larger units that they're building, the 2 and the 3 bedrooms, I guess maybe more the 3 bedrooms, what kind of price point are they coming in at? I always sort of wonder, is someone choosing between, let's say, a $1 million 3-bedroom condo and a $1 million house?
Yeah, I don't think they're quite $1 million, but they're certainly getting close to that point on average. And the 2-bedroom plus dens, I would say, are in that area as well. But when you take a look at the sales data by price range, mm-hmm. and you compare it this year to last year, you're seeing increases of 50% or more for units that are priced over $600,000. So there's definitely demand there. And certainly a lot of that has to do with, I think it's demand from the higher end, from those that are downsizing, but it's also couples, younger couples, small families in some cases, that are priced out of the low-rise market within the city of Toronto. And these price points are actually competitive with respect to pricing for even a semi-detached home. A semi-detached home in desirable neighborhoods close to the core is exceeding $1 million now, and detached homes is kind of well above that level. So the fact that we've seen such restrictive supply in the resale market for single-family homes and rapid price escalation, it has created an opportunity for these larger units that are priced below $1 million, but mm-hmm. above $500,000. And as I mentioned, that's really where we've seen the fastest rates of sales growth this year.
Wow, that's amazing. And then in terms of the rental buildings, you were alluding to earlier that there are more developers going with rental buildings now.
Yeah, so we're tracking about 6,000 purpose-built rental units under construction across the GTA, most of that actually in the city of Toronto. So that is a 25-year high. That's the highest level that we've seen since the early 1990s. After that point, developers completely turned away from building new rental. And now they're starting to turn back to it. And a lot of the reason behind that is the economics are just simply starting to make more sense. Mm-hmm. So rents have risen to a level that are making rental projects financially feasible. Rent growth in the city has been about 20% over the past 4 or 5 years, cumulative, averaging around 3-4% per year. And then actually in the latest quarter, we saw rents jump up by close to 10% year over year.
Wow. And
the reason behind that is price increases are beginning to price first-time buyers out of the housing market for sure.
Right.
We're seeing very strong levels of immigration, the highest levels of immigration that we've seen in a decade actually into the GTA. Very strong growth in the prime renting cohort between the ages of 20 and 35. And extremely strong employment conditions as well. So, job growth, the demographics, and the affordability situation are pushing more and more would-be first-time buyers into the rental market.
Right.
And with the latest mortgage rule changes, which is going to make it even tougher for first-time buyers to get in,
absolutely,
that's going to keep demand strong. So developers are recognizing that vacancy rates in the city have remained extremely low for a long time. There's very strong upside demand potential in the marketplace remaining. And even though we're building a lot of condos that do come into the market as rentals, demand has been, more than strong enough to absorb that supply. And in fact, what we saw in the third quarter was that the average condo rental was leased out in an average of only 12 days, so less than 2 weeks on the market.
Yeah.
And that was down from an average of about 20 days last year. And that average of 20 days has been pretty consistent in previous years. So the market for condos in terms of rental is tightening up quite a bit. And as I said, it's starting to push rents up and encouraging developers more so than they have in the past to actually start to build rental for the first time in really 20, 30 years.
Wow. Yeah, because I've certainly noticed it in my neighborhood. I live at Yonge and Eglinton, and there certainly seem to be quite a few more rental buildings going up, but there obviously seem to be a lot of condo buildings going up around Yonge and Eglinton too, and I know that, for some residents, they feel that that's a concern. Can you sort of speak to why that shouldn't necessarily be a concern, that there's so many condo buildings going up in a particular area?
Well, I mean, in some regards, there can be some concern if the condos all sort of go up and within a short period of time, it can have the impact of saturating the marketplace and depressing prices. Mm-hmm. And we did see that in some pockets of the city over the past few years. But, you know, the demand for condominiums has just been so strong, and there's been such a limited inventory that the market has shown the ability to absorb extremely high levels of new product. So, you know, there's going to be periods where certain areas of the city see a lot of completions over a narrow time period, and that does create some slack in the market. But it's really important to recognize that in most cases, the deliveries that are scheduled across the city of Toronto are pretty staggered.
Right.
So, you know, if there is a period where there's a lot of units that are being built, it's going to be followed by a period where there aren't going to be many completions for an extended period of time. Now, you know, within certain areas, as you mentioned, like Yonge and Eglinton, you're seeing a combination now of both condo and rental being developed.
Yeah.
But what I can tell you is that the rental buildings are being absorbed very quickly. For instance, the new project that was recently completed at Balliol Park there in Davisville, it was almost 70% absorbed within a couple of months. And in fact, the rents in that building are getting higher values than the closest comparables in the condo market that are nearby.
Wow.
So it shows that, you know, there's demand for different kinds of rental product. And, you know, while there's still very strong demand in the condo rental market, there's those that are, you know, longer term tenants, I would say, that place a very high value on professional tenant management and the security of tenure that comes with living in a purpose-built project.
Good point.
So it's a bit of a different target market, and I think it actually complements what's being offered in the condo market. The condo market is typically leasing units that are smaller, one bedrooms and studios, and then you have the purpose-built market, which is offering a greater selection of larger suites and really targeting those tenants that plan on living in the building for a lengthy period of time, whereas within the condo market, the turnover rates are relatively high.
Right, of course, and at least this way the tenants don't have to be concerned that their unit's going to get sold. At least if they're living in a purpose-built rental, they know they can actually stay there for a long time.
And they're willing to pay a premium for that.
Mm-hmm. Interesting. And so in terms of the overall supply of condos in general, I mean, I know a lot of people they can't really wrap their heads around all the development going on in the city, and there's always sort of this concept, or something I read in the paper, that people say that we're overbuilding. But I've known certainly in the resale market as an agent, what I've noticed this year is, well, now we're setting offer dates on condos because there just isn't enough supply. So I think sort of back to some of those articles I read over the last few years about, we're overbuilding. I'm like, they have no idea what they're talking about. Do you want to speak to that a little bit?
What's ironic is that, you know, we continue to see a high level of development, and the development is very dramatic. You look around the city and you can see construction cranes, and it immediately elicits fears of oversupply. And it's true, we do still have 50,000 units under construction in the GTA, and that's a level that's been pretty consistent for several years now. But if you take a look at the actual available inventory within that supply, it's at its lowest level that it's ever been. Out of all of the units that are in development right now, they're over 90% pre-sold. And the resale market isn't offering any relief at all. As you mentioned, you know, you're seeing offer nights for condos and bidding wars. And that's consistent with the data that we've been looking at, suggesting that the sales to listings ratio is at its highest level of the past decade, and in a very tight seller's market. Average condo prices on a per foot basis were up 12% year over year in the third quarter. So there's a lot of demand, and there really isn't much turnover occurring in the resale market. We have to recognize that even though we build, you know, 15, 20,000 condos a year in terms of new completions, very little of that actually comes up for resale. The bulk of it goes directly into the rental market. So it really doesn't have that much of an impact on price. Construction levels have more of an impact on the rental market than they do on the resale side. And we haven't been launching in pre-construction that many projects as well. So demand for new condos is just as strong as it is in the new sale market as it is in the resale market. But new openings haven't changed in terms of their volume in the past 3 years. And in fact, in the core of the city, they're actually declining. So developers are having more difficulty bringing sites into the market, acquiring new sites, getting them approved, bringing them to market, and being able to keep up with the level of demand that we're seeing right now. So, as I said, we're getting to a point where the market is almost completely sold out, and the resale market is extremely tight, and the rental market as well. So there isn't a lot of supply relief anywhere in the marketplace right now. Mm-hmm. However, part of that is because of a temporary slowdown in deliveries this year. So last year and the year before, we saw new